Welcome to Texas Real Estate Research Today. I'm Brian Pope, Managing Editor of TG Magazine here at the Texas Real Estate Research Center. Joining me to talk about the housing market outlook for the remainder of 2021 are research economist Dr. Luis Torres and economist Dr. Jim Gaines. Welcome, guys.
Thank you for having us.
Between COVID-19 in 2020 and Winter Storm Uri earlier this year, it's been a tumultuous couple of years for the state. What do you see as the overall housing market's biggest weaknesses right now? Jim, we'll start with you.
Well, the biggest weakness probably in the housing market today is the lack of suitable inventory, both on the supply of existing homes being offered for sale in the marketplace, as well as the new homes. The new homes, the builders just simply cannot build homes fast enough relative to the demand. The problems there are formidable in terms of the numbers of units available. And on the existing supply side, the people simply aren't offering their houses for sale as quickly, and the rollover or turnover effect has slowed down considerably. So what we've got is a real imbalance there in the marketplace of strong, high demand facing relatively short supply.
Luis, how about you?
I have to agree with Jim. It's a supply issue we're facing currently in the housing market. And unfortunately, that's caused prices to increase at a very high rate. And that's affecting affordability in our state, and specifically in certain areas like Austin, where you can see that the lack of inventory of homes for sale with a price tag below $300,000 is practically unavailable. There are no homes at that price tag, and it's really difficult to find those homes. So again, it's a supply issue, not a demand issue we're facing currently in the housing market.
So flip side of the coin, what are the market's greatest strengths? Luis?
So the greatest strengths, I would say, first of all, would be the low mortgage rates we're seeing currently. Also, the economic recovery we're living through right now, and again, the demographics behind the housing market, the millennials coming into the housing market, coming of age to purchase a home, and again the movement, the migration of people from other states to our state. We've heard the stories, particularly or the numbers from California of how families moving to California to our state, to the state of Texas. So all of these have allowed the demand to be strong and to remain strong during 2020 and during 2021.
Jim?
Well, yes, exactly. The greatest strength in the marketplace right now in the housing market has got to be the demand. And there's several factors on that strength of demand. Dr. Torres was exactly right. The low interest rates that we've had, and particularly the very low interest rates at 3% and even lower, has actually brought some future demand into the present. People who might have been thinking of buying a home a year, 2 years from now, are buying now to try and take advantage of while those rates are still low. It is also true that Texas remains, and has been for the last decade, one of the strongest growth states. In fact, numerically, we were the strongest growth state during the decade of the 20-teens, adding people. So when you add people and then the economic recovery and strengthen our economy of jobs with low interest rates, it's the very strong demand in the marketplace that's creating the strength in the housing market today.
So we're approaching fourth quarter 2021. What are your market projections for the remainder of the year and going into 2022?
Yeah, well, the rest of 2021 is going to be strong. The second half of the year, we've kind of expected all along for the market to stay strong. Incidentally, all economic outlook, and even to some extent the housing market outlook, is dependent on getting the COVID under control. That is because that's going to determine the overall economic recovery, the strength of the recovery, and the timing of the recovery. If we look at it though, the rest of 2021 is going to be good. Interest rates are going to continue to stay at the relatively low rate they are today. They may move a little bit, but it won't be that much, even on into early 2022. Now, on into 2022 further, the jury is still out of how that's going to happen. Texas is still poised to have good economic recovery, job recovery, people moving to the area, and so that all portends for a very strong market. Even the energy sector, the price of oil has picked back up. Those markets that have been so affected by the decline in the price of oil during the early part of 2020 are going to see some recovery as well. The Midlands and Odessas and some of the other markets more closely associated with the energy sector.
Luis, how about you?
So I have to agree with Jim. For the remainder of 2021, still strong demand. Supply is going to improve somewhat, not a lot. That should alleviate some of the price pressures going forward in 2021. Now, for 2022, yes, we still expect strong demand somewhat. We do expect it to weaken. Why is that? I think one major reason, we expect mortgage rates to increase again somewhat. Why? Because possibly of the change in monetary policy stand by the Federal Reserve. So that would cause mortgage rates to increase. Now, also, don't forget, we saw a very high price appreciation during 2020 and 2021. And that's priced out some of the people, some of the households trying to purchase a home. So that would also cause demand to weaken somewhat. Again, the issue in 2022, again, is going to be housing affordability, especially if the price range below $300,000, where the months of inventory, even before the pandemic hit the economy, were really low. And after the pandemic, they became even lower. So those type of issues are going to remain. But overall, we do expect strong demand in 2022.
That's it for this edition of Texas Real Estate Research Today. Jim and Luis, thank you for sharing your insights with us.
Our pleasure.
And thank you for joining us. For more on this, download our 2021 Mid-Year Texas Housing and Economic Outlook. You'll find it on our website. Until next time, please follow us on social media. We're on Facebook, Twitter, LinkedIn, and Instagram. Bye, everyone.